we will double our production. We'll go from 3.5 to 6.8, or we'll go from 17 years, at least from 15 years to 27 years on the same pit. So effectively all we do is we increase the pit size, do more pushbacks, and actually mine out more of the ore body.
Hello, everyone, and welcome to another edition of Triangle Investor Interviews. I'm your host, Lucian Valkovic, and before I announce my guest, just a quick reminder of a disclaimer. This interview and all my interviews are not a recommendation to buy or sell any shares, products, or services. Always do your due diligence and consult with your financial advisor. And my guest today is Gavin Chamberlain, CEO of Bannerman Energy, a uranium developer with assets in Namibia. Gavin, delighted to have you back on the show, and it was great seeing you in London on WNA Symposium.
Hi, Lucian. Yes, really good to catch up again. I think it was over a year ago that we did our last interview, so probably well timed to get another one in post at WNA.
Yeah, agreed. Perfect timing. I always enjoy listening to people with extensive experience in the mining industry, and you are definitely one of the most experienced people out there. So I want to pick your brain on the current uranium market. So let's start with that. How do you see it today? And are there any historical parallels? You've been on the market for a long time. Do you see any parallels like 2000s uranium bull market or something more from the past?
Yeah, no problem at all. Thanks. I think WNA obviously was a good position and a really buoyant conference this year. I mean, very well attended, about over 1,100 people. But what it really did do, it started crystallizing more than just supply demand, but the whole aspect of the nuclear industry. So I think we had people represented there from absolutely every single aspect, from us as producers all the way through to Microsoft as potential users in the future. So a really good conference from that perspective. And probably, it's only my second conference, but probably the most buoyant one, speaking to people that have been going to these conferences for a while, probably the most buoyant one that we've had for a long time. But for me, I didn't actually get to attend too many of the presentations because most of my time was spent on outside with meetings, which is obviously an important part for us from a conference perspective because we get to meet people face to face, which is always important. But I think the main messages for me or takeaways were on the demand side is, on the back of the fuel report that was released as well, but just generally in conversation, I think there's a general acceptance that the demand has increased from what was released 2 years ago and a real confidence around where the demand appears to be going. So no matter which model that you look at, even if you look at the lower case in terms of the fuel report, you're still looking at a demand growth from what was previously forecast. I mean, and some of the drivers there, this year I saw a lot more on SMMRs and the fact that SMMRs by 2040, probably 10% of the demand is, I think it's realistic from a demand perspective. Whereas last year, no one was quite sure where SMRs were going and what the timing would be. I think we've seen a lot more movement and some real major players playing in that field at the moment. It was good to see the Japanese back. So we had a couple of meetings. Really good to see them back in sort of the buying frame of mind, which was good. What else? I think predominantly it was just a positive vibe, and definitely we've seen numbers moving up. Obviously, I think we've come out of a really chaotic environment almost, particularly in the US where, utilities have, I think, been very conservative because they weren't sure, were there going to be tariffs, weren't there going to be tariffs? Now seems pretty clear that there won't be tariffs on uranium. And then, the latest executive orders that have now sort of cemented themselves, I think are also stabilizing sort of people's attitude. And we've seen a slow but steady climb in the spot price, which is always something that I like to see because I believe that if you get a slow, steady climb, you don't get erratic and volatility that we saw. Let's say this time last year, we saw a fair amount of volatility. So I do like the slow climb, and I think that is realistic because the slow climb will tend to pull up prices as we move. So I think positive points from the demand side. The other interesting thing as well is with the supply side is if you look at the fuel report, one of the big problems is that a whole lot of the major announcements made around supply came post the compilation of the report. So, you saw two of the major suppliers declare that they're going to be lower on production. We've seen problems with restarts on ISR problems, at least ISI projects. So on the whole, what you've seen is almost a reduction in the forecast production or supply, whereas you've seen a distinct growth in the demand, which I think is really good. The one thing when people ask me where do we think it's going is if you just take the representative or middle range fuel report demand, for some reason they seem to think that if there's a higher demand that you're suddenly going to get an increase in supply. And that's something that I don't quite understand, because if you don't see a change in attitude and an increase in basic pricing, you're not going to see that increase in supply. So at the end of the day is, if you take the low road supply and you compare it to any other scenarios, you've got by 2040, 100 million pounds that'll short in the market.
That's a very, very good point, and agreed on all you said over here. It was a great event. We really had a lot of things going on over there. Let's switch to the company update, the Etango update. Your company has made strong progress on all works over there, bulk earthwork works and site preparation for the project, with over 1 million lost time injury free. That is very important to emphasize. So that was achieved, I believe, in June or July, something like that.
Correct, yes.
Yes, Gavin, can you give me an update? Can you walk me through the key milestones you anticipate before the late 2025 final investment decision? And how are you mitigating any potential delays from supply chain constraints?
Perfect. Yeah. I mean, as you know, I'm always passionate about talking around the progress on site. When we spoke last year, I think we just awarded the bulk, at least the access road contract and the water supply contract, and I think the power supply contract. So since then, we've completed all the internal roads. They are now complete. We've completed the full construction water, including the circulation of the internal piping that takes us to the different sites within the project area. We've also completed the full power and the internal power supply within the mining license. That is the permanent power supply, but that's connected to Rongo Red, which is the local power supplier, and that's been activated, and we now have live power on site as we speak. The bulk earthworks we placed in August last year, but that's a 2-year contract. So we're about halfway through, and really, really pleased with the progress that we're making, specifically in the earthworks for the heap leach pad, which, as you probably know, that's 1 kilometer by 300 meters wide. It's a massive piece of earthworks. So that project's going really well. And as we've previously said, all of those contracts were placed on Namibian contractors, and they've been performing really well. Since then, what we have done as well, you're probably aware that we raised 85 million in June, and once again, we've gone through a stage gate process with our board, and on the back of that fundraise, we've now extended the engineering and design contract, which we saw as a not a significant risk, but as a risk to the project from the perspective of, if we lose engineers because we don't move ahead with engineering, it actually puts the project back further than just losing the engineer. So we've extended that contract. We've placed the contract now for the initial phase of concrete work, and we've also placed the contract now to start. We blast the stone for the drainage lay on the heap leach on site. So we've actually placed that contract as well. So both the concrete and the blasting contract are in the throes of establishing on site, and we should see significant progress in those two areas by the end of the year. Over and above that, really the other focus has been on our external infrastructure. So we signed the contract with NAM Power for permanent power. So that design is now commenced. We've also signed an agreement with NAM Water, We're still waiting for the final supply agreement, but we signed an agreement that allows us to start with the construction of the bulk water, permanent water supply line. So that's in the throes of being negotiated and finalized at the moment. So that's where we're going to on the construction side. And then the other highlight is post WNA, I flew across to Germany to the Koppen factory, where they've now completed the construction of the high pressure grinding roller. And we went there for the factory acceptance test. And that's in the process now of being packed up, ready to be transported to site. So another significant milestone in terms of our overall schedule. And the other thing we've done is the contracts that we've placed have been placed to keep us on the critical path. So right now, with FID not being, we haven't drawn a line in the sand and said FID is going to be by a certain date. It's allowing us to make sure that we can manage the risk of any change to FID as we move forward with the project. And the good thing about the fundraise as well, in the beginning of July, when the fundraise was finalized, we had 140 million Australian dollars in the bank. And that once again gives us the capability of doing contracts on start while also preserving cash flow to make sure that we can manage any risks related to a movement of FID.
Right. I have to ask you a few questions about FID. There are a lot of investors ask me to ask you more details about it. You have, just like you said, you don't have the exact date. The final investment decision is targeted for, let's say, late 2025. So, Gavin, what are the critical dependencies here, such as permitting, contractor agreements, or market conditions that could impact this timeline?
Yeah. So for a typical FID, Lucien, what you would require is you need technical approval to ensure that you're happy with the technical design. So we've actually already achieved that, and we already have board approval in terms of the technical side of the project. In terms of contracting as well, that goes hand in hand with the execution policy or method that we follow on the project. And that's also been approved by the board in terms of moving forward with an EPCM type project managements. And so that's also been approved. So what it really comes down to is the finalization of FID is now down to one remaining sort of thing to be solved, and that is the financing. And as you're aware, we've been running with two streams of financing options. We've been looking at debt, and we've also been looking at strategic partnerships. Both of those work streams are well advanced. But at the end of the day, the final decision, and even though the final decision will always be linked to the uranium market, it's not like we're looking for a particular price in uranium to be the trigger for FID. The trigger for FID is the total solution for the funding of the project moving forward. So uranium price, yes, it will affect uranium contracts, and obviously we can talk about the contracts just now, that's just a very small part of the financing solution. It's really around getting the optimal solution that's going to give us the best shareholder value protection. So we need those two streams to come to a conclusion to be able to make that decision.
Okay, Gavin, once the FID is secured, how will you prioritize capital allocation between construction, operational readiness, and potential exploration?
So we won't do any more additional exploration at the moment, apart from potentially some grade control drilling that we obviously want to do before we start with mining. And that obviously gives us a little bit more certainty in terms of our proven reserve on site. But that's not really a focus. Our real focus will be on the operational readiness, growing my operational team in Namibia while we concurrently construct the project. And I believe that we've got the bones of a really good operational team, and we've always had the backbone of really good construction people running the project. To give an idea is by the end of the year, we'll probably be up at over 250 people on site from the contractor side. We're currently running somewhere between 70 and 90, but with these two new contracts placed, that number will climb. And what's been really good is because we've brought contractors in on a step-by-step process, we're not having any problems with getting inductions done, getting medicals done. We're getting people through on a daily basis without having queues of people standing in the sun waiting to go through medicals. So it's really helped us to have a really smooth movement of people through induction with minimal delays to people establishing on site, which has been very pleasing to see. But it's on the back of, my site team has been on site now for over a year. So they really know what the standards are and they know what we're looking for. And you spoke about the 1 million man hours injury free. The other important role, sorry, it's not 1 million man hours, 1 million shifts, but at the end of the day is we're heading for 16 years next month. By mid-October, we would have been operating for 16 years without a lost time injury. So we're really looking forward to achieving that milestone as well.
That is great stuff. How is the situation with the skilled labor? I mean, the problem is across the board. Whoever is in my show, whatever company, whatever commodity, they all have problems in some ways. How is the situation in Namibia, especially with your company?
So I think our strategy to use Namibian contractors is really paying dividends. So what we did is we took big contract packages and we cut them down into smaller packages so that the smaller Namibian contractors would be competitive in those contracts. So all of the contracts that we've placed to date, including the 2 recent ones, are all Namibian. So it has a couple of advantages for us is by placing the orders now before any other mining company places orders, we're securing teams and getting them inducted and on site, which means that by staying ahead of the wave, it's keeping people available to us to do the construction. So we're very pleased with that as an outcome, particularly around construction-based contracts. On the supply side, we've contracted with mechanical equipment suppliers over the last year and a half. And we always had a dual contract where we placed the contract, we negotiated the escalation on the back before we placed the contract, and then we placed an order to receive vendor data, but we also placed the order for the full value, and effectively they only start manufacturing when we issue them the instruction to commence with manufacture. So we know who our suppliers are, we know what their production lines look like in terms of where their windows to be able to put equipment in, and all of that is aligned within our overall schedule. So we're very, very pleased with where we're going at the moment. And Namibia has been looking for work. They've got people sitting on the streets with qualifications that don't have work. So we don't see an immediate need or an immediate stress around the construction side of things. We're bringing somebody in who's going to be focused purely on operational readiness and operations. And his task will be to start identifying the immediate needs for the operational readiness and starting to secure. And our focus here again is securing Namibians to work on a Namibian mine. So that's really the way we're driving it. So it's always at the back of our minds because you never know how quickly these situations can change. But by having contracts in place with key contractors, we've to a large extent addressed that risk. We've mitigated it. We haven't necessarily removed it.
Okay. Gavin, let's talk offtake. We mentioned it before. You correct me if I'm wrong. You have 2 offtake agreements for 1 million pounds of uranium signed already. How does this limited agreements, if I may call it, fit into your broader strategy for securing long-term contracts? And what is actually your long-term strategy going forward?
Yeah, no problem. This is one question that I did expect, so I'm quite happy to talk to it. We've only contracted just under 6% of our supply from 2029 onwards. So effectively, it's a very small portion of what we're going to be producing, but it did 2 things for us. The one thing that it's done for us, to use, let's say, a rugby analogy, is it's made us match fit. We spent the last 18 to 24 months talking to our legal team, talking to the utilities, talking to the logistics providers, etc., and going through this whole negotiation process. So effectively what we're doing is our internal team is what we regard as match fit for what we see coming. And what we see coming is potentially a wave of movement in the supply market where we're going to have to be addressing and putting out contracts to utilities at a fairly high rate of knots. But what we've done is we've put a committee in place. So we take all our proposals through the committee, and we've already had opportunity to debate numerous different models that we will be prepared to offer to the market moving forward. But typically what we're doing is we saw these initial contracts as key because of the message that it gives. You know, the fact that some of the biggest utilities in the US have done their due diligence on us, have been committed and are willing to sign contracts with us. And we've also tested clauses around flexibility, and flexibility, you know, goes both ways, but our focus on flexibility is around a potential change in startup. So we've managed to negotiate terms with them that I think are agreeable to both, that are definitely agreeable to both parties, which I think is very important. But also it gives a message to other utilities that, oh, somebody else has actually been willing to contract with Bannerman, and therefore it probably opens up our window a little bit wider without having to go through, let's say, 6 months worth of due diligence. So we've achieved two things with those contracts, but our focus still is on layering in our contracts. We've set a ground level, if you want to call it, with these contracts, and potentially now we will start moving as the market moves. And once again, I think you've heard me say this 100 times, is be prepared, be patient is our strategy. So the be prepared is we match fit. The be patient is we are going to wait for the right level of market before we start contracting again. But that doesn't mean we're not talking to the utilities. We continuously talking to utilities. And the fact that we've now seen some Japanese, European utilities have also started talking to us, it's all positive signs for us.
Yeah, you sat down with the utilities. Help me understand. Do they play a waiting game? Okay, we cannot talk in general terms. This one utility is like this, one utility is like that. But overall, how do you see utilities position themselves against the market at the moment?
So I think we all know that effectively in an understocking environment right now. But the utilities are not panicking. They still pay in it conservatively, patiently. And I think the first half of this year was more or less just written off because of the uncertainty that was going on, particularly in the US. I think we're starting to see a stabilization, and I think that we're going to start seeing an uptick now in RFPs coming out. A lot of utilities, I think, haven't quite realized yet that if they're not quick enough, they may end up not being able to find pounds. I don't think that has gelled necessarily with all of the utilities. But believe me, I think they probably think in their minds they've got the next 5 to 7 years. They think they still got a gap and they still think they can contract, but they're not going to rush into it. And, you know, they're conservative companies by nature, and it doesn't necessarily surprise me. But we are seeing a significant uptick now, as I said, but slow and steady, which is what we like. And I think that may drive us into another round of RFPs and contracting.
Yeah,
But I don't think that
point.
answers your question 100%, but it's very difficult to comment on what they're
Of
thinking.
course.
It's what I'm
No, I
observing.
want to pick your brain on this, and you answered it perfectly. Thank you very much for this. Gavin, Etango is targeting 3.5 million pounds of U3O8 per annum initially. How do you envision scaling operation post 2028 startup, and what role will modular and hybrid technologies play in this, in optimizing efficiency?
So you're talking about our actual production?
Yes.
In terms of ups, yeah. So scaling up our production to take it from the 3.5 to the 6.8 of the XP model, which we published almost a year and a half ago, I think. So the XP is where we look at taking 3.5 and producing 6.8. So effectively doubling the production. It's modular in that the crushing circuit is identical to the existing crushing circuit. So effectively you're running two crushing circuits next to each other, and then we bring it into the heap leach and then into the wet plant. So effectively, you have two modular plants that would stand next door to each other. So that was the concept of the expansion project. It needs, it's a desktop study. We will still do further studies, but we don't need additional drilling for resource and reserve. It's really focused on getting the optimal solution. There may be opportunities to have a shared conveyor belt overland, two crushers and a shared conveyor belt, and then diverge again into different streams. So that's really what we'd be looking at in terms of modularization of the plant design.
Okay, looking to, let's say, 2030, beyond Etango base case, what expansion opportunities, such as, let's say, satellite deposits or value-add processing, do you see for Bannerman?
Yeah, so that's really what I'm trying to talk to here is we will double our production. We'll go from 3.5 to 6.8, or we'll go from 17 years, at least from 15 years to 27 years on the same pit. So effectively all we do is we increase the pit size, do more pushbacks, and actually mine out more of the ore body. Over and above that, we have two satellite deposits, which we haven't drilled to resource level yet. So we will still do some additional drilling, but to do it now when we're talking 15 years time doesn't make sense. It's not good use of our capital, but we know we've got them within our mining license. So they're fully licensed, fully permitted. So we can drill them at any point. But we're not planning to do that in the next 3 to 4 years. We really want to get Etango 8 up and running, and potentially towards the back end of the construction of Etango 8, call it Etango 16 to the next level in terms of study level.
What about M&A, Gavin? How are you approaching M&A? Is there any point of searching other projects outside of Namibia or some adjacent projects? What's your M&A strategy here?
Yeah, so it's a difficult one. As you know, we brought a business development Matt Horgan based in Perth, who's working with us as well now. So obviously he has a focus on business development. But the company focus right now is to get Etango 8 financed and FID done. But that doesn't mean that we won't necessarily look around. Ideally, if we do look around, we would, our skills level within the company is really focused on open cost uranium. We don't really want to be getting into ISR because it's not something that we have an internal understanding of. Potentially, you could look at underground mines because there's more, it's closer to an open cost than an underground, but we don't really want to move away from what we regard as our high level of skills. And we're not aggressively or openly looking for M&A targets. But obviously, it's something that's always at the back of our mind.
Fair enough. Gavin, final question. News flow from the company. What can investors expect, let's say, in the remainder of 2025 and early 2026?
I think more the same. So focus on getting the construction moving forward. Obviously, if we get too close to FID, there would be some announcements around either debt or strategic funding. But as I said, we're not going to be putting a timeline to that. That is definitely the one thing that we will leave floating. But otherwise, I think probably it's going to be more around the fact that we're maintaining momentum, some positive messages coming from site, and hopefully an ongoing good safety record, which I do have no reason to believe we won't be able to achieve.
And I wish you luck with that. That was Gavin Chamberlain, CEO for Bannerman Energy. Gavin, thank you very much for joining me today.
Thanks, Lucian. It's always a great pleasure to talk to you.